Hello, guys. What is happening? Welcome to this live stream. It is May 9th, Monday, May 9th, and the markets are continuing to collapse. Today, another big day down in the markets, and we'll go over that first. First of all, before we go over that, I just want to say that we're having Hilliard Macbeth on the channel on Wednesday, 6 p.m. Mountain Daylight Time. Do not forget to tune into that. I kind of regard Hilliard as the Michael Burry of Canadian real estate. He has been calling it since 2017. And a lot of people would probably say, oh, that means he has no credibility because real estate went up, yada, 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 yada. And I don't think that's the case at all. You know, it's really interesting. Michael Burry, his bet against Canadian real estate, against the American housing market. Get it right. I'll get it right eventually. Started in 2004. So he wasn't deemed right until 2008. And does anybody now regard Michael Burry and when they say his name go, yeah, but he wasn't right. He was predicting that from 2004. No, they don't, because you can never time these things exactly. So Hilliard offers a wealth of knowledge and insight. He's going to be on here. I read his book when we were down in Phoenix, Arizona over Christmas. I thought it was fantastic. I could not put the book down. It was just amazing. So please tune in for that. I'll try and bring your questions forward throughout the stream. I'm going to be giving Hilliard some questions and talking points, and it's all going to be off the cuff. We haven't organized any sort of script or anything like that. So it's going to be really good. So please tune in for that. You will greatly enjoy it. That is not to be missed. So as soon as you see that live stream come up, make sure your notifications are turned on and you hit the set reminder for that stream so you're notified when we go live. Make sure you hit the notification button down below and turn all notifications on so you get notified. You can always turn it off at the end of the day after that stream passes, if you don't want it on all the time. Anyway, the markets are absolutely tanking right now. So today, the S&P TSX down 3%, over 3%. It's broke and closed below 20,000. Absolutely tanked. That's the Toronto Stock Exchange. S&P down 3.2%, closes below 4,000. Absolutely insane. The Dow faring slightly better, full of value, well, some value stocks, I would say, not full of value stocks, holding it up, down just 1.99%. But one thing which I noticed was down significantly today was the Canadian dollar, now 76 cents. If you look at this thing, it has really gone down. Like, look at this. We went from 80 cents literally a month ago to 76 cents. Imagine if this continued month by month. That would induce hyperinflation. This Forex volatility like this is sort of unheard of. Like, that is a drastic move in 1 month for the loonie. And that's not the only thing moving. There are multiple things moving. So we had a little bit of a flight into bonds today. Kind of a dead cat bounce on corporate debt. No real moves. Junk debt selling off, and it was really mixed. Some of the Canadians catching a bounce because they sold off hard last week. JNK hitting new lows. This is junk debt. This is a lot of Carnival cruises, and all those are basically in this, and that is absolutely tanking now. We're heading back down to these 2020 levels. That is not a good sign. And when the market crashed in December 2018 and there was that liquidity event, we are well below that now. And I always pin that 100 level, seems to be once we get below that 100 level. So debt is selling off. That's not a good thing. All the Canadian bank stocks hammered today, down significantly. All the Canadian lenders down. Royal Bank now trading under $100 US. That's just absolutely. These banks have sold off hard, as you know. I'm short in these banks, and I'm in a risk-free trade now. I'm so far into the green that my stops are at break even, so I cannot really lose. Touch wood. I mean, there's always a slight chance that the broker could screw me. But yeah, I'm essentially in a risk-free trade on that. So that's good. The metals down, the GDXJ down significantly. All metals are down. Everything pretty much being thrown into this market crash right now. So I expect to see more downside for gold and silver, and they'll present good buying opportunities, because I believe these will be the first things to shine. No pun intended, and not financial advice. But everything down, all the hype stocks here down across the board. Coinbase down 20%, and as Arthur noted, it's just currently breaking that 30,000. It's testing that 30,000 level on Bitcoin. So Coinbase down significantly. And I mean, this is just insane. These are all these hype stocks that everybody was so emotional about. This cannot go down. There's no way. Everybody loves tech. These hype stocks are just down, down, down. And, Tesla today, down 9%. And, people don't realize Tesla is propping up the S&P. Once that thing starts to go, look out below, because there is a long way down for Tesla. And that is currently helping prop up the S&P 500. And no doubt it will probably be took away from the S&P 500 in a year or two. I kind of think that Tesla is going to be the Yahoo Finance of the dot-com bubble. It's not the Yahoo Finance, the Yahoo of the dot-com bubble. It's looking at the Yahoo Finance page that did that. But essentially, still going to be a very good company, good fundamentals, good cars, everything like that. Stock price out to lunch, unfortunately. Valuation completely out to lunch. And that's what people don't get who invest in this type of stuff. They rationalize, Tesla is great and all that. And they forget that people like me aren't saying that the company isn't great, doesn't have good things coming ahead for them. We're just saying that the stock is insanely overvalued and it has a lot more downside possibly heading towards it. Shopify just absolutely blown away. Beyond Meat at $31. That was trading at $100 a year ago. Amazon down. All these big names down. Absolutely insane, guys. And it's not just US markets that's down. It's Canadian. It's the DAX in Germany. It's the FTSE in the UK. It's the Hang Seng is selling off hard again in Hong Kong. All these markets are heading to the downside, and Australia we've got there as well. Also heading to the downside. So not a good sign at all. And as we said, crypto is currently testing that 30,000 level for Bitcoin. Major support area. If it doesn't catch a bid there, it has a long way down to go. So it is just insane, guys. So anyway, enough with the markets. I just wanted to wrap that up. But we have a lot of good stuff we are discussing in today's live stream, how housing prices will go down more than people will think. And housing prices historically, they always correct to the trend, the historical trend, and usually fall below that trend. History always repeats itself, and we're going to use an example today of that so that you can see it visually, and we can also go through the psychological aspects of the market. And funnily enough, guys, we will see some familiar patterns in the way the markets have been rolling, were rolling in 2006, 2007, 2008. All around that time, and how they are rolling today and were rolling last year. And you are going to be blown away by it, because, you know, it is one thing that people are rationalizing right now is, you know, Canadian real estate won't go down that much. The recency bias, everything like that comes into play. You know, Canada home prices have not declined a very significant amount in a long time. So Canadians just don't really know what that wake up call is going to look like. So shout out to Hungry Lion for mentioning this. He put this in a comment on one of my other live streams. I didn't hear about this anywhere. This was a subscriber, so thank you, Hungry Lion. I'll just quickly whiz through this. This is only a short thing. Layoffs confirmed at Service Credit Union as company ends, quote unquote, enters, quote unquote, transition. Layoffs have been reported at Service Credit Union. That's one of the biggest credit unions here in Alberta, just so that you know. Layoffs have been reported at Service Credit Union headquarters in Edmonton. The company told Global News Tuesday it's undergoing a transformation, which we spoke about in our most recent quarterly financial results release. So staffing changes are often necessary to realize an organization's full potential. But isn't that interesting that it comes at a time when the housing market is cooling across Alberta significantly? Obviously, mortgage originations are going to start to decline heavily from here. There's not going to be as much refinancing going on. So that would mean layoffs from the mortgage brokers and even layoffs in the real estate industry. All those people who became realtors in an environment that was completely artificially born are basically going to be out of a job. And I don't mean to be nasty about that. That's just the reality. That's just what's going to happen. And, you know, I've read some terrible stories in the way of people that have had really good jobs, really good careers and whatnot, and they've left that last year to pursue a career in real estate. Now, honestly, there's nothing wrong with a career in real estate, but real estate is one of those things. It's sales. I worked in sales in the past, and sales is like 90-10 again, or 70-30, or however you want to say it. You know, 70% of people are just getting by, and there's a small proportion, the 30% or the 10%, that are very good salespeople. And the same goes for real estate. There is a 10% of those realtors are really, really good at their job, fantastic realtors, and then the rest of them, not so much. And that's the same with any sort of sales job. So it could be a sign, it could not be a sign, but I thought I would mention it because Hungry Lion was talking about it in the comments. So anyways, we're going to use Phoenix as an example in today's live stream. And the reason for using Phoenix as an example is it's a perfect bubble market. There was all the rationalizations and stories about Phoenix. There still is right now. People are still rationalizing the bubble, which you can see on the screen there right now. But the thing is, Phoenix is perfect because I kind of feel like, you know, everybody has had their bull case on Phoenix, and Phoenix is just obvious. Like, there's so many rationalizations. It's sunny, it's nice and warm year round. You've got retirees. It's a tech-heavy city. There's all these different rationalizations which people make up to support them making decisions or trying to sell you something that they financially benefit from, like a real estate broker or a mortgage broker. So anyway, without further ado, let's get into this and let me explain. So I really like this chart. So I got to thank the Arizona Real Estate Notebook for making this chart, because he's got some fantastic charts on here. So what I want to talk about is how real estate corrects further than the trend line. You know, we like to, well, I mean, I don't care myself, but people like to think that, yeah, no, real estate won't go down. Even if there's a housing crash, it's not going to go down that much. I guarantee places like Toronto are probably going to end up like Phoenix. They'll end up in the same situation because they are basically suffering from the same things that Phoenix suffered from back in 2008. And how well did Phoenix do? Well, let's see. So let's go all the way back to 2000, you could buy a home in Phoenix for 125,000. That was the median home price in Phoenix. And then that shot up, and it was really between 2003 and 2005 that shot up from a mere 123,000 all the way to 219,000, 220,000. So that went up a huge amount in a short period of time, because most of that move, if you look at it, it happened from 2004 to 2005. Funnily enough, it happened in just 1 year, guys. So, and then what I want to show you is you had a double top. And basically, double tops is psychological, really, more than anything. But it's a pattern that you see on all different price charts, on stocks, real estate, everything like that. And it's sort of a funny one, because the reason why you get a double top, and I'll explain this to you real quick, is because essentially after you have a big fast run in anything, you're going to get the smart money who's going to sell. They're going to start to sell. They're going to say, oh my God, this run was insane. We're going to sell. We're going to lock in our profit. So then the price starts to cool down immediately from that. So it starts coming back down like it does in 2005, 2006 here. But then all the people who couldn't buy when prices were going up and were waiting to catch a break, they start to say, oh, the prices have come down a little bit. That makes me feel much better about me making this decision. So we're going to hop in the market as well. So then all those other people hop in the market like we're buying the dip. We're buying the dip. And that creates this double top. Now, double tops can occur for multiple different reasons. It can be the actual ceiling of price that you're banging up against, essentially. That's just the limit of affordability for that area. So once you hit that and you go up against it twice, in actual trading, in probabilities, the chances of, if there's a rejection on the second top, that means the probabilities are higher than 50% that it's going to break out to the downside. And the same goes if it's going for the upside. And funnily enough, you see the same pattern on the downside too, because these patterns, it's human emotion, guys. You know, people think I'm crazy. They say, you cannot relate real estate to stocks. How can you not? Because real estate is supply and demand. Stocks is supply and demand, albeit with more institutional money, more computers trading. But the reality is we see the same patterns on the charts. So how are they different if we're seeing those same patterns? Those patterns to me are not price. When I look at a stock, I don't look at the price and think, oh, it's $40, $50. I look at the chart and think, this is human emotion. What are traders thinking at that moment? What are people thinking at that moment? And I can tell you, during this move to the upside here, there would have been absolute panic. There would have been incredible amounts of FOMO. I can tell you that. You guys know that, because we've just seen a massive move in real estate that's happened over the past couple of years that has generated the same thing. And it's these same patterns that we see over and over again. They repeat constantly, yet people seem to rationalize, oh, yeah, you know what? That is just such mumbo jumbo. I believe my market is going up because the sky is green, the grass is blue, like what I did there. Anyway, but you know what, guys? So let's continue looking at this chart, and we got much more to look at here. So then you peaked out around this 220 mark, and you came from all the way down here at 123,000. So nearly doubled in price. Okay. over the course of 3 years or so. No, over the course of 5 years. Sorry, we're looking from 2000. So anyway, you had that double top. So then prices started coming down. They started coming down before the financial crisis. And that's what I want to outline. The crisis was caused by the real estate blowout that happened. And that would not, like the GFC would have not have occurred if there hadn't been this blowout in credit. And this is exactly what we see happen on the chart. So the chart prices start coming back. And then by the time we get to when Lehman went under, which I think was around September or October of 2008, around that level, look how far prices had already gone by the time we got to that point. Like they were already back to the trend line. And now, of course, the probabilities, as always suggested, you will go below the trend line. And that's exactly what happened here. Prices went to $91,000. Now, the thing is, I don't even know if this is adjusted for inflation. It's probably not, let's be honest. So if you adjust that price for inflation, like that is down unbelievable. Like that is down so much because there was a high CPI prints that were happening in this lead up when energy prices spiked, when inflation spiked, and there was stimulus money that was injected into the US economy after the dot-com crisis. And, you know, stimulus lit the fire and low interest rates lit the fire of the American housing bubble. And it's been the same way globally this time. That's why we see the same patterns repeating globally. It doesn't matter if you're in Canada, New Zealand, Australia, the UK, the United States. We all see the same emotions, the same patterns. It isn't good. But in markets which didn't have unbelievable amounts of stimulus, you don't see these massive rises in asset prices, unless, of course, they're somehow tied to the Western economies where stimulus was injected, like places like Mexico, for instance. They're like trickle-down places from stimulus from the US and Canada, places like Greece, Spain, Portugal. These were all the same places that blew out in the financial crisis. And I will be buying real estate in Mexico for pennies on the dollar soon enough, because these markets are set to tank just like the rest of the markets, because people are going to go, wow, I'm in trouble. I've lost my job. We'll have to sell our house in Mexico. Like that's going to be one of the first things that people get rid of. The vacation homes gone, bam. And you know, a lot of vacation homes in Phoenix, Arizona. And you can see that price is going down to 91,000, sorry. That's absolutely insane. 2000, they were at 123. We went down to 91,000. Inflation adjusted, that's insane. But then we went down even further. We had a double bottom. So you literally came off the bottom right here. And then again, we had a double bottom. And that again is a pattern, you know. It can be the floor in prices. When you see these patterns, they occur, and the probabilities are, when you see it, it's like I said, it's higher than 50% now that it's going to the upside. And if you see a triple bottom, it's going higher than 60%, vice versa, until you top out at 75%. But basically, that is exactly where you saw the bottom put in, around here, May 2011. So how long did it take for the prices to come back down to this bottom and bottom out? So May 2011, and the top really when it started to decline was 2005. So that's 6 years, guys. That's 6 years. That's much longer than it took for this massive rise here. Like this massive rise literally pretty much started off in February 2004 and was done by 2005. It was like a 16-month move. It took way longer coming down. Why is that? Why does real estate do that? This is where, real estate is different. to stocks. And that's mainly to do with price anchoring. It takes a while for people to change and realize, hey, the market has changed. We're going to have to start reducing prices. Like, these buyers aren't coming. People wake up to the new reality that, hey, we have got to adjust. We've got to adjust our price, and they start adjusting the prices. But that takes a long time. Like, think about people's psychology in Toronto and Vancouver. These places are going to be places where price anchoring is really going to be affecting and holding up prices more than it would do. Places like Calgary, Edmonton, Saskatoon, not so much, because people know how volatile home prices are. Like, they've seen much more volatile home prices than other markets. And you know what makes me really laugh is when you have people like on Twitter. These people on Twitter, basically, they're like, you can tell like what a mania they're in, that they just cannot see outside this bubble that they're just sort of in. And you know, Edmonton, Calgary, all these different places, just because something is less overvalued does not mean it's undervalued. That doesn't mean, like, Calgary real estate prices is cheaper than Toronto. That doesn't mean it's undervalued. It's still overvalued with about 30% downside to get to the trend. But the thing is, people rationalize it. They're like, oh, you know, that hasn't gone up so much, so maybe that's a buy. Let's buy there. And you know, these people, they're just in a bubble. They can't understand. There's no getting through to them. Unfortunately, they're a lost soul, and they'll eventually find out the hard way what it really is, that all the prices, all the markets are just totally out of control. And, you know, it will be a hard reality that they will learn. But, you know, one thing that, I mean, this guy who made these charts, hats off to him, because this really shows everything that people have been on about time and time again. Is the supply. Oh, the supply prices are never going to come down because the supply is so low. It's so low. It's not coming back. Okay. So we'll look at that right now. We'll use Phoenix as an example. So you can actually see here how supply and pricing works. And I actually talked about this in a video a while ago where I said, where you've got this massive divergence between the supply and the price means that you're going to see the opposite happen at some point in the future. You guys that have been kicking around this channel a long time know that I did that video. I did it on the whiteboard and I showed you those divergences. And I said, you're going to see that supply appear because all it's doing is people, it's human emotion again. And it comes back to psychology again. And I hate to keep doing this, but it really all boils back to people's psychology. When prices are going up, people ain't selling. People are thinking, we'll hold off, Jane. We'll wait. We'll just wait. Because prices are going up. We're getting richer waiting. So why are we in a rush to sell? We don't really care. So the complacency starts. People don't list their houses. You then have a pandemic on top of that, where older people who should be entering the market to sell because they're retiring, they need to cash out that equity because most of their wealth is locked up in real estate, and they ain't selling because they're the most vulnerable, quote unquote, people. So that just makes it even worse because supply is just even worse. And this is all logical, guys. Anybody could work this out. Like, this is all logic. This is critical thinking. This is not rocket science. Anybody can follow along with this and see where it's going. And then guess what? Prices start to decline. Oh, suddenly everybody starts to list their home for sale because they realize, hey, housing prices have gone up a lot. We need to sell. Prices are going down. And then they list their home. And you can see that there's a slight lag on that in this chart, but you can see that's exactly what happened in this real estate bubble in Phoenix. So the supply bottomed out here in March 2005 when the prices hit their all-time high, was when the supply was the lowest. What do you know? Who would have worked that one out? And then the prices suddenly, and this is the price anchoring period. You can really see it. It was really 2007. So you basically had 2 years it took for the market to wake up to the new reality. You can see that on the chart because supply was exploding. So months of supply was going higher and higher and higher, yet prices weren't really moving that much. And then that all changes because eventually people wake up and realize there's no buyer coming. And funnily enough, like all patterns, they repeat themselves and people are of the same nature. They then see even more people rushing to market or cutting prices. And then they start to think the buyers ain't coming. People are cutting prices. We've got to sell. And that's when you get fear. That's when you get panic. And realize, guys, this was all before 2008. You have been brainwashed to believe that real estate prices crashed after 2008. That's not true. We're seeing it right now on the charts. And I hope you take that in because all these news media outlets that propagate these stories, they just basically are owned or financed by the financial institutions. So they have a vested interest in keeping the narrative, whatever the financial institutions want the narrative to be. And the thing is, you can clearly see that when we literally had a little bit of a fight there, and then it continued to explode, and then it hit like the inventory hit its all-time high in January 2008. So it did come back down in 2008, but that did not affect price. And then it just continued to go down and it still didn't affect price. You had that price. And then eventually you finally got a bottom that was made around here where historically speaking, where the supply was before, it essentially went back to that trend here. But then again, you've got this artificially low supply. It's getting down again to these 2005 levels, these dangerous levels. And you're going to see again the same thing happen. It's going to explode, and prices, which are going parabolic currently, 52% in 2 years, are going to come back down. And this is cycles. This is what happens. And it's so important to talk about this and visualize this on a chart. And really, this is listings, a month supply. So you can see that they just follow each other. The listings drop to the lowest that they ever had, and then they just went parabolic. I mean, that is insane. 41,000 listings, 54,000 listings. I mean, it is just insane. And then you've got sold listings to new listings ratio. Not sure that really matters. Sales to new listings ratio. Not sure that really matters. Sales to new months of supply. But yeah, you get the picture. And there's one chart at the top where it's overlaid and it kind of looks like a mess. That's why I didn't want to show you it at the start. But you can clearly see how all these things match up. You've got homes listed for sale going parabolic. And then there's a delay. There's a delay between here and here, and the price comes back down. So the thing is, these patterns, they repeat over and over again. People tend to rationalize thinking it's not going to happen. My market is not going to go down price. My market is not going to correct to the trend line. Luke, you are out to lunch. You're out of your mind, and you can believe what you want. Like, you know, I'm not here to persuade people. I'm here to tell it how it is. That's the way I see me giving back, is just telling it how it is, a spade, a spade. I got skin in the game. I'm short in the banks. And I made this trade publicly. I posted it on my Twitter as I did it. Everybody who follows me on there knows The timestamps are on there. It can't be hidden. So the thing is, I made that trade. I have got skin in the game more than people who own homes, because it's more incredibly risky to short Canadian banks given their history of returns on their stocks. So anyway, this pricing, you can see it, how it goes further than the trend line. So where does the trend line lie for places like Toronto and Vancouver? You're talking 55 to 60% declines in those markets that you would see. And it will happen. Probability suggests that it will happen. When will it happen? I can't tell you exactly, or over what period of time. Who knows how long it's going to be stringed out? It could happen over a period of 10 years. It could happen over a period of 2 years. The way things are moving, everything seems to be moving at hyper speed compared to previous bubbles. So we'll see if that continues, but there's going to be some anchoring point at some stage where people, and maybe it'll be like the bottom before the pandemic started. That's when you'll see, oh, I'm buying the dip because I'm getting in before the pandemic price rage went on. And then prices will just still continue to come down. More supply will appear as if magic, as if Harry Potter himself did some magic trick and the supply just appeared, and people will be wondering how. And the government will probably be saying, the Liberal government at that point will probably be saying, look at our housing plan. It's phenomenal. All this supply, it's all us. They'll be trying to take some credit for it, even though it was nothing to do with them. You know, a lot of people are looking for some saving grace, and many of the things that people think are in fact positive for real estate, I am totally the opposite. And I can't wait to speak to Hilliard about this as well, because Hilliard is of the same mindset as me, that BlackRock, these financial institutions, just like in 2008, they are bad news. The markets that they are invested in, they are bad news. And not only that, all these Chinese people that have bought real estate in Canada, in the United States, in the UK, when the recession and the financial crisis happens in China, which is in full swing, that's still coming, that's still happening. Everything is still going wrong in China. When that happens, all these banks in China that lent their money to come overseas and buy houses for cash are going to demand repayment. And guess what, guys? They're going to have to start selling their properties overseas at whatever price. And do you think that's going to come all at a similar time? Like it all might rhyme almost. Of course it will, guys, because all these things come together. The Chinese recession that will happen, everything that's coming together, it's all going to cross heads at the same time. And it's just not looking good at all. And, you know, to be honest, guys, at the end of the day, it's like I always say, like, it doesn't give me any sort of, like there's nothing positive that I can say about this. There's nothing that I can say that is like, oh yeah, I don't want this to happen. I just want to be clear about that. I don't want this to happen, but I know it needs to happen and I know it will happen. There's a difference. I don't want this to happen. A lot of people might get the idea that I want this to happen, and I don't, believe me, because people are going to die. People are going to be made homeless. People are going to lose their livelihoods. Kids are going to lose their livelihoods. It's going to be a nightmare. And really, the people responsible for this crisis are the government, the financial institutions, and greed itself. But really, the two players that are responsible for all this mess are governments. That's all governments, conservatives, NDP, liberals. They've all contributed in some form or another to this crisis that we see today. There is no party that is going to save you. Again, politicians just tell you what you want to hear. It's just recency bias. it's like I said, guys, if you wanted to grow, like if I really wanted to grow a YouTube channel and that's all I cared about, which it isn't, as you guys know, then you just reinforce the recency bias and you reinforce what people want to hear, exactly like the politicians do. And they do that for a reason, because people listen to it and they go, yeah, I want to hear that. I want to believe that Pierre is going to come in, he's going to take office as prime minister, and he's going to stand up for me. I want to believe that this change is going to make a difference. The reality is, it doesn't make any difference. It was the same thing with Donald Trump. Trump's going to come in. Trump is going to revolutionize everything. Everything's going to be better. He comes in. He's just like every other politician that's before him. He's just, yeah, he's a little more animated. Yeah, he speaks his mind more, and it's a little more funny in that respect. But otherwise, he does exactly the same things that all the other politicians do before him. And the thing is, guys, I still remember Trump begging the Fed to drop rates to the floor to start this bubble. And he was the one who injected the first load of stimulus, the second load of stimulus. So, you know, again, you just had an administration change hands in the middle and then do exactly the same thing. And I know a lot of people will be saying, yeah, but Trump is different. He's going to say, you know, whatever, vote him in. He's not going to do anything. All these politicians, they don't care about us. They really don't care about us. That's why it's better to start waking up, start thinking, how can I get out of these Western countries that are like a prison, really, a prison on your freedoms? Then it's just a world that is completely unlocked. And that's really the end goal for this whole channel. You know, this thing is going to play out, but then I hope to be able to help people get out of these places. And that would just be the most amazing thing that I could ever imagine to do, is helping people leave places like Canada, the US, the UK, and find that place that they are meant to be, where they get treated the best. And that's really what it's all about. So it's anyway, guys, this is crazy. It's going to happen. It's coming. It's happening right in front of our eyes right now. And the real nail in the coffin in this one, in terms of the recession, is inflation. If we continue to see high inflation going into a recession, that is the death cross. That is a depression. And that is the ingredient, I believe, that will make this a depression instead of a recession, because the government doctors its figures so much. Think about it. You're on unemployment. The government is saying inflation's going up at 3%. You know it's going up at 13%. So your unemployment's going up 3% per year. You are getting decimated. That amount is a low amount anyway. You can't live off it. Just imagine what it's going to be like. The food banks in Calgary are already just oversubscribed, absolutely oversubscribed. That's why I laugh at people who say, Calgary, oil prices. Yeah, and again, that's another rationalization. Every market has its rationalization. In Calgary, it's oil prices. And, you know, it's hilarious, guys. It's absolutely hilarious in some respects that humans just make these mistakes again. Like, I really struggled to believe years ago, when I used to watch The Big Short, that we would see this unfold again. And it literally is a carbon copy. It's literally a carbon copy, with the stimulus, the low interest rates. I mean, what the heck? It's the same thing over and over again, with the retirees, with the people buying vacation homes in Greece, in Portugal, in Spain, like in Mexico. It's the same. This happens over and over again. And people somehow say, this time is different. How? Like, I don't get it. I don't get how we keep repeating this. And it just seems to be getting closer and closer together. It's got to a point now where it's so close together that there's no way around this. I mean, imagine they drop rates to the floor, do QE again. 2 years we'll be in the same situation. Like, it ain't gonna happen. It's not gonna work like that. You know, there is smarter money around the world that they will see this for what it is. And you know, that's the scary thing, which I said in the previous live stream. The Fed, if the Fed loses credibility, which they are rapidly, like they do another pivot, and then they say, okay, we're dropping interest rates to the floor, QE. And then the markets say, so what? You're doing this again? I'm not buying equities after what happened like literally yesterday when the market was tanking. All these big names are down like 70, 80%. I'm not buying. And that is it. That's it. That's when it's done. It's over because people don't believe the Fed anymore. Because all this QE nonsense is all just psychology. It's a fugazi, as that guy says in The Wolf of Wall Street. It's a fugazi. It doesn't exist. It's not real. It just doesn't exist. The QE, it's mainly the psychology around that. People think QE, stocks to the moon. But now what's happened has happened in such rapid succession that if the Fed pivots again, people are going to say, are you kidding me? I'm not buying equities. Like, this is not happening. Do you see what I mean? Do you see how this is in the end zone? I hope you do, because if you do, then you will be positioned to thrive in some ways. I mean, you only have to go look up what were the best jobs during the last financial crisis. What were the things that were worst affected? The things that did the best were education, healthcare. The things that did the worst were construction, finance, real estate, manufacturing, anything like that. So all these things are out there. Start researching them, because that is our best tool to get ahead. And we need to get ahead because nobody is going to help us. No politician, nobody else. We are there for each other and for ourselves. And anyway, guys, with that being said, I'm going to leave you there. Please smash the hell out of that like button. If you enjoyed this, please dislike it. If you hated it, it's fine by me. You're free to do whatever you like. At the end of the day, you can follow my trade on Twitter at Market Mania CA if you want to see the trade on there. And as always, guys, I honestly say this with my deepest heart. I don't want this to happen, but it will happen. And I love you guys, and peace. Take care of yourself.